Hey everyone, welcome back to the channel. It's Friday, September 13th, 2024, and today, we're diving deep into the stock market and Forex landscape to catch you up on everything you need to know. So grab your coffee, sit tight, and let us get into the biggest moves and trends shaping the markets right now. Alright, let's kick things off with the stock market. We saw some interesting action today across the board. The S&P 500 closed slightly down by 0.3%, marking its second consecutive day in the red. Investors are still digesting the latest inflation data released earlier this week, which showed a slight uptick, not what the Fed was hoping for. This has raised some eyebrows and reignited the debate on whether we'll see another rate hike before the year's end. Tech stocks were hit particularly hard. Apple and Microsoft, two giants that usually set the tone, both saw declines. Apple dropped 1.5% following news about potential regulatory hurdles in China, while Microsoft slipped by 1.2% after reports of slowing cloud business growth. But it wasn't all bad news. Over in the financial sector, JPMorgan Chase surged by 2% as the bank announced better-than-expected earnings, driven by higher interest rates and a strong performance in their trading division. Now, let us shift gears to the Forex market. It's been a bit of a roller coaster for currencies today. The US dollar index climbed 0.4% against a basket of major currencies, bouncing back after 3 days of losses. Traders are flocking to the dollar as a safe haven amid global uncertainties, especially with the ongoing strikes in major European economies and growing tensions in Asia. Speaking of Europe, the euro took a hit today, down 0.6% against the dollar, touching its lowest level in over 2 months. The ongoing strikes in France and Germany are starting to weigh heavily on the Eurozone's economic outlook, with many traders worried about potential disruptions to supply chains. Meanwhile, the British pound didn't fare much better, sliding 0.5% amid renewed Brexit uncertainties as talks over a trade deal with the US hit another snag. On the other hand, the Japanese yen continues to weaken against the dollar, down another 0.8% today. There's a growing belief that the Bank of Japan might intervene soon to support the yen as it approaches a key psychological level. Let us talk about the commodity currencies and emerging markets. The Canadian dollar was down 0.3% against the US dollar today. With oil prices cooling off after their recent rally, the loonie's been under pressure. WTI crude dipped 1.2% to 88 per barrel after inventory data showed an unexpected build. Over in the emerging markets, the Brazilian real was up 0.4%, buoyed by stronger than expected economic growth data and the central bank signaling a pause in rate cuts. Meanwhile, the Turkish lira continues its downward slide, dropping another 1% against the dollar as inflation concerns mount and political uncertainty looms large. So, what does all of this mean for you? Well, if you're trading Forex, keep an eye on the dollar and those safe haven flows. The next few weeks could be crucial as we get more data on inflation and central bank moves. Stock market folks, be cautious but also look for opportunities in sectors that might benefit from the current volatility. And remember, no matter what happens, staying informed is your best weapon in navigating these markets. Thanks for tuning in, folks. Don't forget to hit that like button, subscribe if you haven't already, and let me know in the comments what your take is on today's market moves. I'll see you all next time. Take care and happy trading.